In this video, I'm going to look at if Six Flags stock is a buy. I'm going to use my 6-step framework for analysis. By the end of the video, you'll have the answer. So let's get into it. The first step in my framework looks at customer value, and I looked at revenue from 2012 to 2019 because, of course, theme parks were devastated during the pandemic year and that disrupted things. So let's just look at 2012 to 2019 here. And for Six Flags, revenue increased from 1.07 billion to 1.49 billion from 2012 to 2019, and a nearly 50% increase. And what they have is they have theme parks and they got these breathtaking roller coasters, some of the most exciting roller coasters in any theme parks that attracts a lot of these visitors. Another thing I like to look at is the Net Promoter Score, and Six Flags scored a 10. Of course, NPS measures customer loyalty, and a score of 10 says they've got good customer loyalty, so they're treating their customers well. The next step in my framework looks at profit margins, and the gross profit margin remained above 90% from 2012 to 2019, but that's a little misleading for a company like Six Flags where they spend heavily on capital investments to build out these parks, and then as customers come in, they're not spending very much to serve each individual customer because they already spent to build the theme park, and so every customer that comes in just adds to the bottom line. It's more informative here to look at the operating profit margin, which rose from 19.1% to 29.3% in that same time. So excellent profitability here and showing economies in scale, which I would expect from an amusement park, from a theme park business. The next step in my framework looks at the total addressable market, and their market here is entertainment, and an estimated 375 million people will visit an amusement park this year. That's a massive market, and if you think about it, many people will visit a theme park multiple times per year. I know me and my family have visited Disneyland multiple times this year. We've visited multiple theme parks this year, and so this 375 million people might visit the same theme park 3 or 4 times, or they might visit 4 or 5 theme parks throughout the year. So they've got a lucrative market opportunity ahead. The next step in my framework looks at competition, and there are several theme park providers. The good news for investors is nearly all of them are raising prices and indicating more price increases on the way. I mentioned the most popular theme park, arguably Disneyland, Disney World, and they've instituted several price increases since 2019, and of course going back even longer before that, but they've really accelerated their pricing strategy since 2019, as well as Six Flags, as well as many others. And so that's good news for Six Flags and the industry overall, that prices are all rising in unison, so that way customers cannot say, well, you're raising prices, I'm going to go to your competitor. They can't do that because they're all raising prices. They're going to be offended by everyone who's raising prices across the board. And the next step in my framework looks at valuation. And Six Flags, I looked at its price to earnings and price to free cash flow. The price to earnings in purple here is 19.16. The price to free cash flow 21.93. If we look back going all the way to before 2014, it's about, at the midpoint for the price to free cash flow. It's traded at lower valuations before, and then for price to earnings, it's at closer to the lower end of the range that it's traded for. So I would say overall that it's fairly priced, leaning more towards being inexpensive, going back throughout its period, going back before 2014. All right, the final step in my framework looks at risks. And of course, visiting an amusement park is discretionary spending, which could get reduced meaningfully if we enter a recession. Many economists are raising the probability that we enter a recession here in the US and North America. And so this could be a headwind for Six Flags in the near term. So now that I looked at each step, let me give it a grade. Customer value, they got an A. For less than $100, you can get a ticket to one of Six Flags amusement parks, and you could spend all day there. So getting entertained all day for less than $100, relatively good value. If you compare it to Disneyland, for example, it's at I, I want to say arguably near half the price, depending on, some of the specifics. You can spend a day at Six Flags with the family at roughly half the price it would cost you to go to Disneyland, excluding travel and hotel and all of that. So, yeah, I mean, relatively speaking, good customer value there. And then unit economics, I gave them an A. We saw those nice increases in the operating margin. Total addressable market, they get an A. Hundreds of millions of people visit a theme park every year, some more than once. Competition, they get an A. So they're getting straight A's so far across the board. As all amusement park providers are raising prices. That's good news. Risks, they get a B. The near term risks of a recession are real, and the impact to Six Flags is going to be meaningful. So there are meaningful risks in the near term for Six Flags. And then valuation, they got a B plus because we saw relatively inexpensive going back before 2014. So on the next slide, I'm going to answer the question: is Six Flags stock a buy? Yes, it is. Six Flags stock is a buy right now. All in all, operating margins expanding. And then the one thing we didn't talk about yet is all that pent up demand from consumers that have been cooped up at home for the better part of 2 years. They're now going out in droves and visiting theme parks. I mentioned earlier that I visited several theme parks this year, several times, in fact. And each time I have visited, each of these theme parks, they have been absolutely full. You've had to wait long, long times to get on any of these rides. Attractions have had long wait times. Parking lots have been full. So folks are going out and unleashing that pent up demand. So that's another reason why it's a good time to buy Six Flags stock right now. All right, that's all I've got. Thank you for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.